We're coming to you today from the Morningstar ETF Invest Conference in Chicago. I'm here with Ben Johnson. He's the Director of Passive Fund Research at Morningstar. Now, Ben, earlier today you moderated a session titled The New World Order of Indexing. The panel was made up of 3 representatives from major index providers, and there were some interesting discussions on some of the innovation that's happening in the indexing industry and how that translates into the ETF world. One of the innovations that was mentioned was so-called smart beta or factor-based indexing. The panelists seem to have some reservations about those types of strategies.
Yeah, I think those reservations really are not shared just by the panelists. I share them myself. The term smart beta has certain positive connotations to it that I think are somewhat undeserved. And also implicitly, you would think that if these new smart beta strategies are smart, that it would then imply that everything that came before them was in some way dumb, which is certainly not the case. So the smart moniker, I think, is really caught on to describe this space, but I don't think it's an apt name. I think it's incumbent upon investors to really parse these strategies, these indices, to be able to decide for themselves which ones are truly intelligent and which ones may be, in some cases, the product of backtesting and data mining and overfitting of data. So, I think there's a due diligence burden that's really presented itself as this space has grown.
Now, terminology aside, what was the consensus about the value of those strategies among the panelists?
Well, I think it's generally that there is value there. I think if you look at really all the way back to the academic literature where sort of the concept of factors and the distilling of factors and the testing of factors over time and their contribution to investor returns or investment returns sort of began and then into practice, there are essential elements that form the basis of investment returns that can be isolated, be it value or size or momentum. So I think there's a general consensus that there is value there. There are different ways, though, to get at that value and to create indices that look to target these specific factors. And again, that's really where the burden, in the due diligence is necessary to look at these similarly labeled, almost seemingly like-for-like products, peel back that label on the tin to see really what's contained in the underlying index and what it's really exploiting.
Now, you asked the panelists whether there was still room for more innovation. Now, obviously, they're all index providers, so they wouldn't say that no, the market is saturated. But I got the feeling that there was a little bit of awkwardness in their answers. The answers that they provided, as far as their suggestions for possible innovation, all seem to revolve around details rather than major novelties.
Yeah, so I think if you look especially at the sort of legacy, plain vanilla, market cap weighted space, a lot of, if you think of an old stereo receiver, a lot of the crude tuning has been done. And now it's more a matter of fine tuning. So I think the most recent sort of debate in terms of crude tuning was around free float market capitalization weighting. So weighting based on the actual sort of free float of the underlying constituents. Many stocks can have a, large private or government ownership component, and weighting based on the 50% of that stock that might actually be freely available to the public. That was sort of the last great battle, last great stand in terms of convergence of really the fundamental principles of index construction in the market cap weighted space. And now, to your point, that it's focused very much on the fine details, things like investability and turnover, and it becomes difficult as you're increasingly splitting hairs to really gauge what sort of value those incremental improvements or innovations are having.
Now, I'm going to put you on the spot a little bit and ask you, as an analyst, where do you think the innovation is going to come from, or if there actually is room for innovation at all?
So I think there's still room for innovation, but I don't think it's going to happen in the traditional market cap weighted space. I think one of the areas that really is ripe for innovation is the fixed income space in fixed income indices. If you look at the composition of a lot of the major fixed income indices today, a lot of the talk, and it's very warranted, is that these are sort of, in many cases, almost dinosaurs. I mean, these benchmarks were created years and years ago, and they're maybe reflective of sort of an investor opportunity set, but in terms of the benchmark construction, in terms of the risks embedded in them, there's room for improvement, suffice it to say. So I think in the coming years, you'll probably see substantial developments in innovations in the fixed income space in particular.
Okay. Well, thank you very much for sharing your thoughts with us today. For Morningstar, I'm Christian Charest at the ETF Invest Conference in Chicago.